Hi, this is John Kingston from jrtradingzone. I am here with a video related to stock market trading, and those who are trading know very well that market is highly volatile after the corona crash. After the corona crash, the market bounced back. After that, daily the market is highly volatile. Nifty is able to move more than 300 to 400 points on the daily basis. Bank Nifty is even worse. It can move 1000 points up, 1000 points down, making intraday players or intraday traders a great trouble, giving them a great trouble. So in this present scenario, actually non-directional strategies, even though if you are a non-directional strategies, you should have a directional view on the market. Without directional view, you can't even do non-directional strategies. I mean, if you are a making straddles or strangles or like that in the intraday basis or during expiries, today as the market is highly volatile, we should do lot of adjustments. But in this present scenario, we should know how to do the directional trading, how professionals are trading in this market. That is what I am going to present in this video. We should have a professional knowledge about stock market trading. That's what I am going to tell you in this video, because before 2020 it was easy for us to trade in the market. If you are making some strangles or straddles, as the market was not this volatile, we can make some returns. Okay, but today, especially in the expiry days, you see in Thursdays market is hugely volatile. If you are making straddles or strangles or non-directional strategies, you should make lot of adjustments to get into profit or come out without loss. There is a very big risk for us today to do trade on expiry days today. So what is the solution? We all need solution. We should have a directional view on the market. Having a directional view will give an edge in trading. Even though if you are a non-directional trader, we should trade like professionals. How professional traders take positions in the market? How are they trading? In which position they are entering? In which position they are exiting? How they mark the charts? This is what I am going to deliver in this simple presentation. This presentation might be quite lengthy. Traders, I think, will have the patience to watch this video, because you will have valuable content in this video. I am going to make a computer presentation and I will come back. Yes, let's start the presentation. This is October 14th, Friday. Okay, now I am recording the video 15th or 15th. I will show you how the professionals are taking trades. Actually, this was a gap up opening, and even though this is a green candle, it has a tail on the upper side. So actually it is a slightly bullish sign. If the market is showing a gap up or gap down, we can't immediately jump into a trade. We have to wait for the price action. For that, first we have to mark the opening level. This is the opening level. Okay, now can you short this candle? Novice traders or new traders or beginners sometimes may short this candle thinking that the market is going to move down. They may short this candle. Okay, but I will say you one thing: the risk reward is not in favor of as to short this candle. I will show the reason. Okay, so I won't short this candle. The reason is, I will show the CPR. See the CPR line. If I take a trade here right at this point, I can get only a reward of this much. I can only expect a movement from here to here, because the next support level is R3. This is R4 resistance. So the candle began right from the R4 resistance and it is moving towards R3. Okay. Now you got two resistance at this point. One is days opening high and the other is R4 resistance. Two resistance. Okay, now let me close the CPR for a while and let me zoom out. Shall we see that the okay, now see, right, October 7th Friday there are two swing highs. Okay, we have to mark that position also. I will show you, and we can put a different color for that. Yeah, let it be orange. This line actually, this past swing high should be marked even before the market is open. Actually, all the swing high lines must be in our chart. This is another swing high. Okay, this is another swing low. This area. All the swing highs and swing lows should be marked in our chart. Now, let's come to our particular chart on 14th October. See, how many resistance did you get here? Days opening high, it's a resistance. I am saying it's a resistance because candle is below this line. Okay, if the line is below this candle, we call it as a support. I think everyone is aware of technicals, so I will give more clarification. No problem. First is days high resistance. Second, long time swing high. Okay, this orange line. Third is CPR resistance 4. This is resistance 1, resistance 2, resistance 3, resistance 4. Therefore, this zone is actually considered as a resistance zone. This zone can be considered as a resistance zone. We can put it in a different color. We can give it a different color. Okay. This zone is entirely a resistance zone. Now, I can't short this candle, first candle, because the risk reward will not be in favor of me. If I am taking a trade at this point, right at this point, where can I keep the stop loss? If I take the trade at this point, where can I keep the stop loss? The stop loss should be kept below the above this candle. The stop loss is very huge. The risk is very huge and reward is little. Comparing to the risk, the reward is less, so we can't take the trade. Okay, so we have to wait the candle to retrace to the main area. What is the main area? This resistance zone. This resistance zone is actually very important because there are three resistance lines: the days resistance, long time swing resistance, and the R4 resistance. Three resistance. Even if there is one line, it can be considered as a resistance. But in this case, there are three lines. Therefore, it is considered as a very strong resistance. Now, how can you take a trade in this section, in this chart? If the candle break this level, if the candle break this level and shows a bullish closing above this line like this, I will show you. If it closes like this, if it creates a candle and closes like this, you can go long. If the candle is very long, you can't take the trade. You must wait for retracement. You must wait for retracement. Retracement means it may move down. It may move down, come here. It will take support and it will go like this. At this point, at this particular junction, you can take a trade and you can go long. If the close is very strong, it is considered that bulls have taken over the chart and the market is going on the upside. But in this case, the candle just closed in the resistance area, and we have to wait for the confirmation candle. I will zoom out. Okay, you can see slightly clearly. You can see this candle is a red candle showing the signal of bearishness. Then the consecutive candles are also red candles in this area, and it is not able to create a green bullish candle. Okay, so we can consider this area as a resistance area and we can try to short the market. But I will say you only have to take a short position after going and watching the parallel index. Parallel index means the bank nifty. Okay, if you are taking a trade in nifty, you should go and see bank nifty, and the candles should have the room to move in your direction. It must have some space. If bank nifty is facing a sudden resistance at this point, nifty can again turn around, and it can move up on the upside. Bank nifty can pull nifty, nifty can also pull bank nifty. Most of the time I have watched nifty and bank nifty are moving in tandem. Okay, both these charts are usually moving in tandem. Now let me show you one thing. Now this is time is actually 12, 15, 12, 20 candles. Okay, let's go to bank nifty. Now let's mark the day's high. Okay, this is bank nifty chart. 12, 12, 15, 12, 20 candles. We have to note what is the signal actually. 12:50. Yes, right at the day's high, bank nifty is also facing a resistance. Bank Nifty is also facing a resistance. Put the CPR. Okay. Here it has a room to move downwards. This is what I explained already. There should be a room in the parallel index for the candles to move. See, here we are having a space for the candles to move. So, now we are getting a good confirmation at this point, and you can short when the candle is coming out of this region. You should short this candle, this red candle. I will zoom in. Let me zoom in. Yeah. Now you can short this red candle. Where will you keep the stop loss? You should keep the stop loss just above the resistance area. Here you have to place the stop loss. Okay, you see, where can you take the target? The target should be always 2R or the next pivot. This should be a target. Okay, clear? This is how professionals trade in the market. I am supposed to show one more example. Let's search. This is a example for the resistance zone. Let's go for one more example in the support zone. Okay. Okay. Let's come here. Here we are finding lot of supports in this area. Let's go and mark this area. This area is a support area. Long time support area. Long time support area. Now let's go here. This is 12th of October. Okay, 12th of October. Let me zoom in. Yes, see, this is 12th of October. Opening candle is actually a bullish candle followed by a bullish pin bar, and this candle is a engulfing bullish candle, and it is also followed by 3 consecutive bullish pin bar. Actually, for a trader who is only following candlesticks, he has to go long here in this area. He will be going long in this area because he will think the market is going to move in the upward direction. I will show you. Wait a minute. Yeah, because he will think all the candles are bullish candles and the market has to move on the upside direction. His calculation will be like this. Market will be going like this. For a novice trader or a trader who is only following the candlesticks. According to candlestick theory, these candles are the sign of bullishness. But I won't go long here. Why? Or those who are following CPR and price action will never go long in this area. I will show the reason why. See, let me apply the CPR. Can you see the difference? Can you see the magic? Why the chart is turning right at this point? See, why it is turning this point? It's very clear. There is a CPR resistance. So, we can't go take a long trade in this point. We have to wait for the retracement. Again, we have to wait for the retracement. There is another possibility also. The candle has to move and close above the CPR like that. It has to move like this and it has to close above the CPR. There also you can take a long trade. But inside the CPR, we can't take any position. Now, a novice trader must have taken position here thinking that the market has to go up. But we price action traders who are trading with the support of CPR will never take a position at this point. Okay, now see, the market is turning and coming to day's low. We have to mark the day's low in this chart. In the last example, I mark the day's high. Okay, here we are marking the day's low. Okay, putting white color. Now, this area is actually what we say a support zone. Whenever this support zone is broken on the downside, we can actually short the market. We can short the position. Okay, we can sell. But can you take a short position in this particular area? No. I think you may have understood this because we are having a long time support in this level. That level should also be broken simultaneously. Next, let's apply the CPR. You see here. Now we can see one more support coming there. That is the support of the previous day low. So this entire area, I will show here. This entire area is called the support zone. This entire area is called the support zone. Okay, clear? In the first example, I created a resistance zone. Now, can you short the market here? Definitely, you can short the market here. But for that, the candles should close below this support. Here also, the same conditions will apply. If the candle is very long, you can't short the market. You have to wait for the retracement like this. And if you get a confirmation from this point that the market is going down, you can short right at this location. Okay. But in this case, what is the signal we are getting here? The candles are not able to close below the long time support area nor the previous day low. The candles are not able to close below this area and it shows a bullish sign at this particular point and it is making a upward move, strong upward move. Okay, again there is also another psychological thing in this chart I will show you. Lot of drawings here. I have to delete each and everything. Okay. Okay. So it comes. So let me delete the drawings. Yes. Okay. Let it be like that. Yes. This candle is not able to close below this support zone. There are three supports here. One is day's low support. It has just closed below the day's low, but it is not able to close. Candle is not able to close below the long time support and the previous day low. Okay, the candle is turning here and it is actually moving on the upside. I will show another thing also. According to the technicals, this area means, let me zoom in this area, the candle days low, this area should be marked here. This days low is actually considered as a support. I told you already the days low is considered as a support, but we can't short the market because we have two more support in this area. Okay, we have two more support in this area, so we are not shorting the market. So novice traders or those traders who are not following price action, they may short in this area thinking that the market is going down. There are possibilities. And where will they keep the stop loss? They will keep the stop loss right above this candle here. This area is their stop loss area. What is stop loss actually? They are actually buy orders. If they sell the market, they will be keeping buy orders as their stop loss. When all the stop loss get triggered, the market has no way it has to move up. It has to fly. All the stop loss triggered here and the market flied in that direction. Okay, now you can see where can we enter? We should enter when the candle is closing above the day's high. This candle, this green candle is the place where we have to enter. Where can we keep our stop loss? We should keep our stop loss below the support zone. Below the support zone. This is our stop loss area. Okay, we should keep our stop loss here. Take profit at 2 or the next pivot. Now this is Wednesday, October 12th. Okay, now for confirmation, you can go to the Bank Nifty and check whether there is a room for the candles to move on the upside. Now we have confirmation, actually confirmation candle. We have got the confirmation candle. We are going long. We are ready to go long. But before going long, we should get the confirmation from the parallel index also. Okay, let's go and see 12th October. 12th October, time is around 11 o'clock. 12th October. Okay, we cut the CPR. 12th October. 12th October, time is around 12 o'clock. Time is around 12 o'clock here. Yes, okay. Let's apply the CPR here. You see, Bank Nifty is also showing a bullish sign. Bank Nifty is closing above the central CPR. Bank Nifty is closing above the central CPR. This is a sign of bullishness. Okay, therefore definitely we can go and take a long position here. This is how professionals mark the chart. This is how they wait for a trade. This is how they make the trade. So we should plan the trade and we should only trade the plan. This is how professionals trade. Thank you for watching this video, and you share this video to all your friends who are trading. I am not making this video for beginners. This is for the people who are trading in the market, and if they are not making profit, if they are making consistent loss, they can watch this video and they can study something valuable from this video. I believe, strongly believe. Okay, definitely share this video with the trading community. Let them benefit with them. You may like and support my video. Thanks for watching. How was this computer presentation? The intention was nothing. I want to show how these professionals are trading. Professionals are trading with a particular rule. They have a rule based trading. Actually, they have a plan before a trade and they trade the plan. We retailers also should have a professional touch, or we should have the knowledge of price action and chart reading. It's very important in this present scenario, in this volatile market. Without the chart reading capacity, we can't trade. That's sure, because even if you are a non-directional trader, you can avoid unnecessary adjustments. We make serious adjustments when the market is turning against us, but you can avoid that if you are a price action trader. To be a price action trader, the CPR indicator will support you a lot. I have planned to make a series of videos how this CPR is helping us to identify the correct support and resistance in the market. I think you would have got some valuable content from this video. Share this video with all the members or trading community friends so that they may benefit something from this video. If you like this video, the content of this video, please press the like button, share this with your friends, and subscribe my channel. It will be great encouragement for me for making this type of videos. For editing and making this video, we have a lot of effort is given. Actually, I am not a full-time trader also. I am just a part-time trader. I should take time and do this process. Please encourage me in this new thing which I am planning to do. Thanks a lot for watching my video.